Hi friends, you welcome to Sri Guru Raghavendra Banking Coaching Center. So మనం ఈ రోజు సెషన్లో జనరల్గా SBI మిషన్ కింద అంటే మిషన్ SBI క్లర్క్. సో మన టార్గెట్ SBI క్లర్క్ ఎగ్జామ్ ఉంది కదా, దీన్ని ఫోకస్ చేస్తూ SBI క్లర్క్ ఎగ్జామ్ని ఫోకస్ చేస్తూ మనం ఒక 100 MCQస్ని డిస్కస్ అయిపోతున్నాం. మోస్ట్ ఇంపార్టెంట్ క్వశ్చన్స్ని, మల్టిపుల్ చాయిస్ క్వశ్చన్స్ని డిస్కస్ అయిపోతున్నాం. జనరల్గా SBI పార్ట్కి వచ్చేటప్పటికి SBI క్లర్క్లో అన్ని ఏరియాస్ని టచ్ చేస్తూ ఉంటాడు. అంటే లైక్ ఫర్ ఎగ్జాంపుల్ మనం కనుక చూస్తే ఇక్కడ టాపిక్ ఏరియా అప్రాక్సిమేట్ పర్సంటేజ్ చూద్దాం. అంటే ప్రీవియస్ ఎగ్జామ్స్ని బేస్ చేసుకొని, ప్రీవియస్ ఎగ్జామ్స్ని దృష్టిలో ఉంచుకొని, అంటే 2024, 23, 22 ఈ పర్టికులర్ పర్సంటేజ్ ఇవ్వడం జరిగిందనమాట. ఇక్కడ దాదాపుగా ఈ కరెంట్ అఫైర్స్ పార్ట్, రీసెంట్ ఈవెంట్స్, గవర్నమెంట్ స్కీమ్స్, అవార్డ్స్, ఇంటర్నేషనల్ ఇష్యూస్ 70% ఇవి కవర్ అవుతుందన్నమాట. అంటే 50 క్వశ్చన్స్ 50 మార్క్స్ కాబట్టి 70% అంటే దాదాపుగా 35 క్వశ్చన్స్ దాకా మనకి ఇక్కడ ఈ ఏరియా నుంచి రావడానికి స్కోప్ ఉంటుంది. బ్యాంకింగ్ ఫినాన్షియల్ అవేర్నెస్, రీసెంట్ బ్యాంకింగ్ న్యూస్, RBI, NBFC, బ్యాంకింగ్ స్కీమ్స్, రీసెంట్తో పాటు ఇక్కడ స్టాటిక్ కూడా అనమాట. స్టాటిక్ బ్యాంకింగ్ రిలేటెడ్గా కూడా కాన్సెప్ట్స్ అన్నీ 1 by 1 కాన్సెప్ట్స్ డిస్కస్ చేయడం కంటే MCQ కవర్ చేస్తే మనకి ఎక్కువ నెంబర్ ఆఫ్ టాపిక్స్ కూడా కవర్ అవుతాయి. కాబట్టి దానిలో ఆ ఉద్దేశంతో ఇక్కడ దాదాపుగా 7 to 8 క్వశ్చన్స్ రావడానికి స్కోప్ ఉన్న ఏరియా ఇది. తర్వాత స్టాటిక్ జీకే, ఆర్గనైజేషన్స్, అవార్డ్స్, సో ఇలాంటి వాటన్నిటిని ఫోకస్ చేస్తాడనమాట. స్టాటిక్ జీకేలో దాదాపుగా 15% వెయిటేజ్ అనుకుంటే 7 to 8 క్వశ్చన్స్ ఇక్కడ రావడానికి పాసిబిలిటీ ఉంటుంది. మ్యాక్సిమమ్ ఆఫ్ 10 క్వశ్చన్స్ అనమాట. దట్స్ అ పార్ట్. సో మనం ఇప్పుడు ఫోకస్ చేయబోతున్న ఏరియా ఇది. దీనిలో భాగంగా మనం MCQs చూద్దాం 1 by 1. వీటిలో కొన్ని తెలిసినవి ఉంటాయి, కొన్ని కాంప్లికేటెడ్గా ఉన్నవి కూడా ఉంటాయి. వాటిని డిస్కస్ చేస్తూ వెళ్దాం. ద రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా వాజ్ ఎస్టాబ్లిష్డ్ ఆన్ అంటున్నాడు. ఎస్టాబ్లిష్డ్ ఆన్. సో రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా ఎప్పుడు ఎస్టాబ్లిష్ అయింది అనేది మన క్వశ్చన్. జనరల్గా ఈ రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా రిలేటెడ్గా మనకి క్వశ్చన్స్ ఫ్రీక్వెంట్గా కనిపిస్తూనే ఉంటాయి. RBIకి రిలేటెడ్గా, ఎందుకంటే అపెక్స్ బ్యాంక్ కాబట్టి, సుప్రీం బ్యాంక్ కాబట్టి there is a chance to ask a number of questions from this particular one. మనకి రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా was recommended by this RBI was recommended by Hilton Young Commission. Hilton Young Commission with the recommendations of this commission then which was introduced in 1935. These recommendations were given in 1934. And on April 1st, 1935, Reserve Bank of India was officially introduced into the market. So first option 34, second 35 given, no, it's not. So our answer is B correct. B is the correct answer. April 1st, 1935. So that's the reason in 34 this commission recommended. That's why 1934 enactment or act is there we have, that is called RBI Act. RBI Act is a 1934 Act. So then the powers of RBI, so then how RBI can function, these type of information given under this RBI Act. Then unlike 1949 Act, 1949 Act is called a BR Act, that is Banking Regulation Act. There is Banking Regulation Act. This Banking Regulation Act all deals with the regulations, the changes, the rules and rules given by RBI for the smooth running of the banking system. For the smooth running of the banking system, like the rules given by the Reserve Bank of India incorporated under 1949 Act. This is in 1949. Reserve Bank of India was nationalized. Reserve Bank of India was nationalized. there is a speciality, then this 1949 Act is called Banking Regulation Act, BR Act, and the rules and regulations incorporated by Reserve Bank of India to the commercial banking system is listed under 1949 Act. 1949 Act, that is a context. So, what is our answer here? Answer B is the correct one. Moving to the next one. So, nationalized, already we discussed this particular one. Reserve Bank of India was nationalized, it's a known common question. Reserve Bank of India was nationalized in not 1935, in 1935 it was established. It was established in 1935. 1947, 9, wrong, 1949, 50, 69, okay, 49. So, Reserve Bank of India was, RBI was nationalized, the completely taken under the control of the government in 1949. So, like if they have asked a question saying that, then which financial institution in India, which financial institution the government of India owned or nationalized first in India, if they ask like that, you can say in banking system RBI is the correct one. Reserve Bank of India was first nationalized, that was in 1949. Immediately after independence, we have got independence in 1947, and in 1949 Reserve Bank of India was nationalized, RBI was nationalized, this is a part. So, our answer is answer C is the correct one. C is the correct one. Nationalization is a process. In general, it may be RBI or whatever. Nationalization is a process of a government taking complete control over a private organization. Government taking control over a private organization. Private organization is called a nationalization. This is a process. Nationalization is a process where the government is taking complete control over a private organization. If private organization has taken control of some part of government of India or government temporarily, then if it holds, that is called a privatization. That is called privatization. Temporary transfer of property or assets of the private sector to the government is called a privatization. Some part permanently transferred, some part of assets or property of the government, here like a private organization property, if government takes, that is called, this is a nationalization only, this process. Here the government should come, I will write here the government should come. If the government of India's control, government of India's property, assets or a property taken by private organization, private entities, that is called privatization. And if the government assets and property, temporarily taken, that is called privatization. If it is permanently, some part permanently, that is called disinvestment. Disinvestment is a right word, we call it as disinvestment. Disinvestment is a process where the government of India's, the assets or property permanently, some part permanently given to the private sector, that is called disinvestment, or sometimes it called divestment as well, divestment, that is the one. So, our answer is C correct here. Moving to the next one, and the current monetary policy framework of RBI is based on, next question, the current monetary policy framework of RBI is based on what? So, Fiscal Responsibility Act, FR Act or FRBM Act we call. FRBM Act. FRBM Act next given. No. Inflation targeting, deflation targeting, zero interest policy. No, not zero interest policy, not even deflation targeting. It is the inflation targeting policy. So be clear with these type of questions. So then based on the inflation, based on the percentage of inflation, the action would be taken on the policy rates as well as and reserve ratios. So like if the inflation is increasing, then immediately then the directly proportionate effect will be there on these policy rates and reserve ratios. This policy rates and reserve ratios combination we call as a monetary policy. So then if the inflation is increasing in the market, the policy rates and reserve ratios will be increased by the Reserve Bank of India. Through a mechanism called, now the mechanism is called Monetary Policy Committee. This committee will look after this particular one, and then if the inflation effect is there in a particular month, then which is calculated by using CPI or WPI. These are measures to calculate inflation. That's the part, CPI and WPI. Consumer price index and wholesale price index. These are measures. This consumer price index is called retail inflation measure. Retail inflation. So our answer is answer C is the correct one. Be careful with these type of questions. Moving to the next one, CRR, direct question. CRR stands for, CRR is a reserve ratio maintained by the CRR, cash reserve ratio. Every bank should maintain at the end of RBI in the form of reserve, that is called a cash reserve ratio. That should be in the form of cash only. That is the reason it is a cash reserve ratio. At present it is 4%. At present it is 4% of NDTL, 4% of NDTL. of NDTL or ANBEC of the bank. So cash reserve requirement no, cash retention ratio, capital no, cash reserve ratio. So answer D is the correct one. Moving to the next one, who decides the repo rate? All policy rates. The policy rates like it may be repo rate, it may be reverse repo, it may be MSF, it may be bank rate, whatever. So then all these policy rates then decides by the officially by the Monetary Policy Committee. Earlier 2017, then Reserve Bank of India has got full power on this, and later than MPC, Monetary Policy Committee, was introduced in 2017. Then with the intrusion of the monetary policy, so that's completely this decision of repo rates, reverse repo rate is under control of Monetary Policy Committee. Here we have, that's the point. So governor alone wrong, Ministry of Finance nowhere related, and Prime Minister, SEBI, that is Monetary Policy Committee. All policy rates and reserve ratios, then accommodation strategy or accommodation instance, stance we call, stance or tightening stance, neutral stance takes by the Monetary Policy Committee. Monetary Policy Committee. That is the context here we have. So our answer is C. Moving to the next one. Which rate is the long-term discounting rate of RBI? Long-term discounting rate. Repo rate is a short-term one, anyways we know. Bank rate is a long-term. MSF very short-term. Reserve ratio, reverse repo rate, it is also short-term one. CRR is also, we cannot say like short-term, it's not interest rate, it's a reserve. So then it's a regular reserve. We should not say for a short period or long period, whatever, it's a regular one. So here, which rate is the long-term discounting rate? Long-term discounting rate is a bank rate. So our answer is B, correct one. So these are the questions then I am discussing here. These were asked in the previous exams of banks. That's the reason static questions, static banking questions. That's the reason then I have given and I have keep on engaging with these questions. So I am discussing these questions. Try to focus on this so that like you will get benefited of end of the session. Okay. Moving to the next one. SLR stands for. What is the answer here? Our answer is B. And moving to the next one. What does SLR stands for? Statutory liquidity ratio, standard lending ratio, state liquidity reserve, scheduled liquidity ratio, special lending rate. No. So first one is correct one. It is also a reserve ratio. The another reserve ratio is a SLR, statutory liquidity ratio. Statutory liquidity ratio is a reserve ratio. So then at present it is it stood at 18%. 18% of NDTL or adjusted net bank credit. That's a context. So answer 1 or A is correct. Moving to the next one. SLR is maintained in the form of. SLR is CRR we discussed. CRR is maintained in the form of cash. It should be maintained in the form of cash. But SLR context, then if you observe, statutory liquidity ratio, if you observe, then it is maintained in the form of cash, government securities and gold. That's the reason it is called liquidity, statutory liquidity ratio. Liquidity means easily convertible format of cash. Easily convertible format of cash. Convertible form of cash. Easily convertible form of cash. So our answer C is correct one. Moving to the next one. The term ways and means advances related to. Ways, means and advances. It is a short-term loan provided. It is a short-term loan provided by Reserve Bank of India to the central or state government. Central or state government. Then is a short-term loan. It is a short-term loan provided by Reserve Bank of India to the central or state government. So ways, means and advances is a loan provided, a short-term loan provided by RBI to serve the short-term requirements of government, maybe central, state or union territories. That is the context. That is called ways, means and advances. Ways, means and advances. The duration for this one is in general is a 1 month duration. It can be extended up to 3 months. It can be extended up to 3 months. It's a short term one anyways, short term one. Banks lending to the public. Banks lending to the public is not a ways and means advances. RBI lending to the government lending to RBI, and banks borrowing from government, no. IMF lending to RBI, no. IMF lending to the RBI, that is context is different. Then here like B is the correct answer. Answer B is the correct one. Moving to the next one, treasury bills are issued by T-bills we call. Treasury bills are nothing but T-bills. Treasury bills, or we can say government securities. Government securities issued by, treasury bills issued by is one of the best questions like in general. So treasury bills generally then releases or issued by government of India, issued by the government of India, this is the fixed one, and these are operated by doing open market operations. Then RBI reach these government securities to the market, and generally then who buys these securities? Earlier only commercial banks or financial institutions, generally then commercial banks. Nowadays like an individual can also then buy these securities from the auction process. From the auction process, then these can be held by the public, commercial banks as well as individuals. So if they ask released or issued by, simply then you can say government of India. Issued is government. Releases to the market, if they say RBI is correct. So be clear with that particular one. Issued by government of India and operated by or auctioned by Reserve Bank of India. So Reserve Bank of India here like it works as a agent to sell treasury bills. So then we are familiar with this particular OMOs. OMOs are nothing but open market operations. So be clear with this particular word, important one. I will discuss whenever it demands. Okay. So then moving to the next one. So what is our answer here? The government of India is correct one. Answer B is correct. Issued by then, that's the reason then we move to this particular one. Tricky question, a bit tricky question. That is one. Moving to the next one. 364 days treasury bills. So treasury bills may offer minimum duration. A treasury bill can announce for a duration of 7 days. 7 days minimum. And then 14 days security treasury bills also we can observe. But mostly circulated securities are 91 days, 180 days or 182 days, and 364 days. These are mostly circulated treasury bills. Mostly circulated treasury bills we can say. So most moving in the market. These treasury bills are, if you observe the less than 1 year bills, all less than 1 year bills, a short period we can say, like a short period in general, short period is less than 1 year. So all these less than 1 year securities then operated, released and circulated, bought and sold by the different types of market players in general in a money market. That is a point we should understand. So here it is not capital market, it is not equity market, it is not foreign exchange market, not even commodity market. So our answer is answer C is the correct one, that is money market. Less than 1 year operations generally we observe in money market. Moving to the next one. The headquarters of Reserve Bank of India is located in. The headquarters of Reserve Bank of India observed in, like we are familiar with this particular one, that is Mumbai. Earlier it was in Kolkata, it's shifted to Mumbai now. So SEBI, Reserve Bank of India, National Stock Exchange, Bombay Stock Exchange, several banks, their headquarters located at this Mumbai. That is the context here we have. So our answer is Answer E is correct one. Even NABARD, we can say NABARD headquarters as well. So NABARD and like we have several financial institutions, then they are located in Mumbai. But these are major organizations here we have. Moving to the next one. Which bank was first nationalized in 1969? This is an absurd question. In general, like how can we say in 1969 the 14 banks were nationalized? 1969 officially 14 banks were nationalized. 14 banks were nationalized. So we can't say like this is the first bank or this is the second bank. But if in any case these type of questions are asked, like we should come up with the common sense. So first option is Punjab National Bank, SBI, and then in this particular 1969 list, SBI was not there. So then we can strike off that one. Allahabad Bank, Bank of India, and UCO Bank given. So like if they ask these type of questions, there is a chance to ask. Simply then if you come across these type of questions, you should come up with the common sense. Your CS common sense should say in alphabetical order, like the first bank is Allahabad. So this would be the first one. Answer C is the correct one. Absolutely correct, no doubt. Recently it's merged with the Indian Bank. So our answer is answer C is the correct one. C is the correct answer. So the point is that these type of questions then they are posing in the examination as a stock banking. Last year around 10 questions were asked in this particular area, stock banking related areas. Like in this particular short period, we cannot discuss all the concepts related to the static banking. That's the reason then I am focusing on these MCQs. Okay, that is the point. So moving to the next one. Which of the following is not a public sector bank? Which of the following is not a public sector bank? Negative question, negative turn. Canara Bank is a public sector, no doubt. Punjab National Bank public sector, Indian Bank public sector, ICICI Bank private. So it's a private one. Bank of Baroda is a public sector bank. These are public sector banks. And ICICI Bank. In 1955, your industrial credit investment Corporation of India was started 1955-56 financial year. This is a landmark year for several institutions, SBI, LIC and ICICI then started their business during this particular financial year. So our answer is not, he said. So answer is D correct. Answer D is correct one. Moving to the next one. Headquarters of SEBI is in, already we discussed, we come across this one. Not New Delhi, Mumbai, Hyderabad, Kolkata, Pune. So Mumbai, not Delhi, not Hyderabad, not Kolkata and Pune. Our answer is answer B is correct one. Mumbai. Securities and Exchange Board of India. Securities and Exchange Board of India, which regulates our capital market, commodities market, capital market, commodities market, derivatives market, so then all these looks after by Securities and Exchange Board of India. Moving to the next one. NABARD was set up in, here he is asking. NABARD stands for National Bank for Agriculture and Rural Development. National Bank for Agriculture and Rural Development, which was officially started in 1982 with the recommendations of the with the recommendations of Sivaraman Committee. With the recommendations of Sivaraman Committee, this NABARD was introduced officially. NABARD was introduced. So answer C is the correct one. Moving to the next one, IMPS stands for Immediate Money Payment System, International Money Payment, Immediate Payment Service, Interbank Mobile Payment, Instant Money Processing. So then these are acronyms, these type of acronyms you may find, you may come across. Immediate money, not money payment. M stands for not money. This is immediate. IM here in IMPS. This IM indicates immediate. Immediate. So IM for immediate payment system. Immediate payment system. This is absolutely, then our C is the correct one. Answer C is the correct answer. Moving to the next one, the maximum deposit allowed in payment banks is maximum deposit allowed in payment banks. In payment banks. So then we are very familiar with the payment banks. Yeah, payment banks. So in the form of deposits, then earlier they used to accept 1 lakh. 1 lakh is the maximum earlier. Now then they extended this to 2 lakhs. So they can, these payment banks accept a maximum deposit of 2 lakhs now, a deposit. So here then deposit is a keyword here. Payment banks. Earlier it was only 1 lakh. Only one bank, 1 lakh. So payment banks or banks in general, then they accept deposits up to 1 lakh, and they can do transactions like they allow the customer to pay the amounts wherever it is required. It is a completely digital one, a digitalized banking system or a digital banking system. It is an example of a digital banking system, complete digital banking system, 100% digital banking system. Payment banks are example or instance of. So then 2 lakhs is the correct answer. So we should move towards the C option, that is C is the correct one. The largest shareholding, next question, the largest shareholding in regional rural banks. Regional rural banks, RRBs, like we are very familiar with this particular one, regional rural banks. So regional rural banks, Narasimhan Committee recommendation, with the recommendations of the Narasimhan Committee, these regional rural banks were introduced in 1975, and the enactment 1976 enactment. Be clear with this particular one. In 1975, then the first regional rural bank that was started, that is Pradham Gramin Bank. That was Pradham Gramin Bank, introduced at UP, Uttar Pradesh, with a sponsored bank. By the time syndicate was there, syndicate bank was the sponsored bank of this regional rural bank, RRB, Pradham Gramin Bank. So then largest shareholding in the regional rural banks. Then first option given as central government, state government, sponsor bank, RBI and HP. These two are nowhere related. Sponsor bank generally then have a sponsor bank 35% share, and state government 15% share, and central government then absolutely 60% share, is a 50% share. The rest is 50% share. So largest shareholding is central government. Answer A is correct one. Answer A is the correct answer. Moving to the next one, lender of last resort refers to. Lender of last resort. Lender means in general the lender, then who funds money, or who funds, or who gives loan, who disburse amount, so they are called lenders. Who funds or who gives or who disburse amount. So lender of last resort in the sense, last resort last resort means till the end, that is till the end, or till last transaction, that is the meaning behind this one. So for in commercial bank sense, like Reserve Bank of India, RBI behaves like a Reserve Bank of India behaves like a lender of last resort, because then from the inception of a commercial bank, from the starting of the commercial bank to their last resort, from their last transaction, Reserve Bank of India funds to the these banks, funds to these commercial banks. So the Reserve Bank of India called as a lender of last resort. It is a function of RBI in general, function of RBI. Generally Reserve Bank of India functions then broadly classified into regulatory functions and supervisory functions, as well as enforcement functions. So is a kind of the supervisory one, the supervisory function, that is a lender of last resort. It's not IMF, it's not World Bank, that is RBI. So our answer is answer C is the correct one. So C is the correct answer, lender of last resort. Moving to the next one, the term call money market refers to loans with the maturity. Duration adugutunnadu ikkada, call money market. So like we are familiar with the call money, note money, term money. These are money market instruments. These are money market instruments in general. Call money market is called a overnight market. It is called overnight market. Note money market is called a durated market. Term money market is a time taking or time or term market. So call money market in general, then the maturity duration is 1 day, that is 24 hours, overnight. That is the reason it is called overnight market. And here like a call money market refers to loan with the maturity of a call money market. It's a 1 day, overnight. Or we can say like so based on the options we will move. Note money market 1 to 14 days, sorry 2 to 14 days. Term money market 15 days to 6 months. This is a general criteria. Call money market is a overnight market, we say overnight market. So overnight to 14 days, up to 7 days no, up to 14 days no, 1 to 30 days no, overnight to, overnight means 24 hours to 2 weeks or a fortnight. Absolutely correct one. This is the correct one. So here like our answer is answer D is the correct one. Answer D is the correct answer. Moving to the next one, the Negotiable Instrument Act was passed in. The Negotiable Instruments NI Act. Negotiable Instrument Act NI Act, that is 1881 Act. One of the oldest acts of one of the oldest acts. One of the oldest acts, that is Negotiable Instrument Act. Negotiable instruments like the best examples of negotiable instruments, checks, promissory notes, and the bills of exchange. These are best examples of our negotiable instruments we have. Negotiable instruments. So then negotiable instruments, section 4, section 5, section 6 of Negotiable Instrument Act. So, section 4 related to the promissory notes, section 5 related to the bill of exchange, section 6 of a Negotiable Instrument Act related to the checks. So, Negotiable Instrument Act was passed in year they are asking. So, that is 1881, correct one. So, our answer is answer B is the correct one. B is the correct one. Next one, check is defined under which section of the negotiable instrument? Ippude manam discuss chesam. Check is discussed check under section C of Negotiable Instrument Act, NI Act 1881. Section 4, that is a promissory note. Promissory note. Section 5, bill of exchange. Section 6 is check. So, most important sections. So, answer C is the correct one. Moving to the next one, priority sector lending target for commercial banks is PSL. Priority sector lending, a target for commercial banks is. So, 30% of A and B, C, no. 35%, no. Is a 40%, then 40% is absolutely correct. Priority sector lending stands for lending to the sectors important for the development of the nation. So, the lending to the sectors which are very important for the development of the nation, or the sectors which are very important for the growth of the nation. So, funding to those sectors is called priority sector lending. The target for commercial banks is 40%. 40% of their adjusted net bank credit. Adjusted net bank credit. That's the one, correct one. So, answer C is the correct answer. Moving to the next one, which of the following does not belong to the SDR currency basket? SDR. SDR stands for a special drawing rights. Special drawing rights. Special drawing rights, then this is called the soft loan window of IMF. It is called a soft loan window of IMF, International Monetary Fund. So, special drawing rights are called soft loan window of IMF. IMF, like which of the following does not belongs to, then he is asking. Dollar is part of that. Dollar is part of that. So, correct one. Euro, correct one. Indian rupee is not part of this one. Chinese yuan is there. Yen is there. Dollar is there. Dollar, yuan, yen, euro, and pound sterling. Pound sterling. These are called basket currency. These are currency basket or basket currency. Currency basket. So, not he is asking. So, like answer C is the correct one. Moving to the next one. Who regulates the money market in India? Money market regulates. Money market is a short-term market. Short-term market regulates by Reserve Bank of India. Answer C is the correct one. Is the short-term market regulates by Reserve Bank of India. Moving to the next one. Commercial paper is issued by. The commercial paper we call as the CPs. Commercial paper is a money market instrument. Commercial paper is a money market instrument issued by the corporates. Corporates or corporate companies. Companies or industries. Corporate companies or industries. CPs are commercial papers. Is issued by, commercial paper is issued by, not by Reserve Bank of India, not by central government. It is by the corporates, not state governments or banks. Answer C is the correct one. Generally then it is commercial papers issues by the corporate companies, then this will be buys by most of the cases commercial banks. Commercial banks buy these papers in general. So buyers wise commercial banks. The seller is a corporate company. Seller is a corporate company. So our answer C is the correct one. Moving to the next one. The minimum denomination of a treasury bill is a superb question. Minimum denomination of a treasury bill. Earlier it was 10,000, later then it's changed to 25,000. So 25,000 is a minimum denomination of a T-bill, treasury bill. Minimum denomination. Minimum denomination is 25,000 at present. That is the context. So what is our answer? Answer C is the correct one. Moving to the next one. Repo means, repo is nothing but repurchasing option. Repurchasing option or repurchasing auction. Repurchasing option or repurchasing auction. So repo means like RBI borrowing from banks. RBI borrowing from banks. No, this RBI borrowing from banks is called reverse repo. Banks borrowing from RBI, exactly. Banks borrowing from RBI is called repo. Government borrowing from RBI, a state or central government borrowing, already we discussed. Ways and means advances. Ways, means and advances. Long-term loans, bank rate is a long-term loan, we can say. No relation with lending, no. This is not a suitable one. Out of these four, then the answer B is the correct one. Answer B is the correct one. Moving to the next one. Reverse repo means RBI borrowing from banks. Officially we should not say this, but anyways, then options wise, banks borrowing from RBI, repo we call. Banks borrowing from each other. So that is called interbank operations. Interbank borrowing. Interbank borrowing rates we call. So RBI lending long-term funds. RBI lending long-term funds, wrong. So answer A is the correct one. A is the correct one. Reverse repo means then reverse repo, RBI borrowing from banks. We should not say RBI borrowing from banks. Generally then we can say like then RBI no need to borrow from banks in general. Simply we can say like banks deposits at RBI. So on the deposits of the banks at RBI, whatever the rate of interest gives by Reserve Bank of India to the banks is called a reverse repo. That's the context. Like in the context of repo rate, RBI lends to the banks. In the context of RBI lends to the bank, so the bank has to give rate of interest to RBI. This is called repo rate. So our answer A is the correct one. Moving to the next one, which of the following is not a part of capital market? Equities, capital market, debentures, mutual funds, treasury bills. Preferential shares as a capital market instrument. Treasury bill is a money market instrument. So odd man is answer D. That's one. Moving to the next one, the headquarters of NABARD is located. NABARD headquarters already we discussed, that is Mumbai. NABARD headquarters located Mumbai. Answer D is correct. National Bank for Agriculture and Rural Development, which supervises all regional rural banks in India and some cooperative banks as well, like primary agriculture credit societies. Moving to the next one, Which bank is known as the banker to the banks? Which bank is known as the banker to the banks? Absolutely RBI. Reserve Bank of India is called as a already we discussed lender of last resort, and banker to banks, banker to government as well, banker to government as well. So our answer is answer B is the correct one. Moving to the next one, minimum paid up equity capital, minimum paid up capital, minimum paid up capital of small finance banks, SFBs, minimum paid up capital of a small finance bank. Generally then earlier it was 100 crores, now it is raised to 200 crores. So at present it is 200 crores, answer C is the correct one. For small banks, small finance banks, for SFBs, and then payment banks, and like we have for asset reconstruction companies, for all these 200 crores is paid up capital now, and even for private sector banks as well, private sector banks 200 crores paid up capital. Moving to the next one, BSBDA stands for. BSBDA is generally then we call it as a zero balanced account. Zero balanced accounts we call. These are also called no frills accounts. No frills accounts, zero balanced accounts, both are same. So BSBDA, then earlier it was called zero balance or zero general account. Then now it is renamed as a basic savings bank deposit account. Basic savings bank deposit account. The first option is the correct one. Answer A is the correct one. Basic savings bank deposit account, BSBDA account. That is the one. Moving to the next one. Which committee recommended the creation of RRBs, regional rural banks? The creation of the regional rural banks were officially recommended by the Gadgil committee, and recommended by the Narasimhan committee. So which committee recommended the creation of RRBs? Officially creation of RRBs recommended by Gadgil committee, recommended by Narasimhan committee. Person wise Narasimham, the person who recommended Narasimham, person wise Narasimham. But here like a committee adugutunnadu kabatti is a Gadgil committee correct one. Answer D is the correct option. Answer D is the correct one. Gadgil committee. So RRBs were recommended by the Narasimham working group, that is Narasimham working group. Narasimham working group. So RRBs were this officially recommended by the Narasimham working group in 1975, and it was emphasized by emphasized by Gadgil committee, Dr. Gadgil committee. So Gadgil committee is the correct one. The person who recommended or who is called father of this banking system, likewise then they asked Narasimham is the correct one. So here D is the correct answer. Moving to the next one, bank rate is used to control. Bank rate already we come across, then this is a bank rate is called a long term rate, long term. Bank rate refers to the long term. So in policy rates, the bank rate refers to the long term, and repo rate, reverse repo rate short term, and MSF is a very short term one. So it's not short term credit, nowhere related to the, it's related to the inflation, to control the inflation. Deflation, foreign exchange, nowhere related, is a long term credit. Is a long term credit then generally then gives by the Reserve Bank of India to the banks. It's a long-term loan gives by Reserve Bank of India to the bank, we can say, or we can move in this way as well. Then long-term borrowing at a discounted rate, long-term borrowing of banks at RBI, or we can say RBI giving long-term loan to the banks, both the same year. So the rate is called bank rate. Discounted rate also called, this is called discounted rate as well. Answer A is the correct one. The term hot money refers to, money with the high inflation, first option, and short term funds moving internationally, high interest loans, illegal funds. It's not illegal fund, it's a legal only. Hot money, then which has got the power to move in internationally, move to the international market. Short term funds moving internationally, that is called hot money, which has got a good potential to move shortly, move in a short term in global market, in short term, which has got good potential to move in the market, that is called hot money. If you say soft money, then which can move internationally, soft money which can move internationally but in a slow manner, very slowly, then if it reaches the market, that is called soft money. Anyways, hot money is a money, short term funds moving internationally, is a money with the high inflation, wrong, high interest loans, no, and illegal funds. Illegal funds we call black money, then these are transferred through a process called money laundering. Black money is a money which is untaxed money. Black money is untaxed money through a process called money laundering. Then these can be moved out of a nation in general. So that is a context here we have. So I'll move to this particular option B. Moving to the next one, which of the following is not a negotiable instrument? Negotiable instrument is an instrument. Negotiable instrument is an instrument which obeys by banking on 1881 Negotiable Instrument Act. Then which is the negotiable instrument is an instrument which is portable, which should be portable, which should be transferable, which should be a portable instrument, which should be a transferable, and which should be transferable and portable. These two are very important terms. Portability, transferability. If a particular instrument comes up with these qualities, these two categories or these two qualities, certainly then we call it as a negotiable instrument. So portability and transferability. Like check is a negotiable instrument, undoubtedly negotiable instrument. Demand draft negotiable instrument, no doubt. A promissory note is also a negotiable instrument. We are very familiar with this particular one. And a bill of exchange, negotiable instrument. Already we come across sections as well. Out of these four, demand draft we call DD. DD is not completely negotiable, but we can consider it as a negotiable instrument. But fixed deposit receipt is not a negotiable instrument, absolutely not. So then challans, deposit forms, fixed deposit receipts, these are not negotiable. These are not at all negotiable. So answer E is the correct one. He asked for the not, that's the reason. Moving to the next one, the banking ombudsman scheme is administered by. The banking ombudsman Banking ombudsman is a context where public grievances redressal mechanism. Public grievances redressal mechanism is a public grievances redressal mechanism, banking ombudsman. So like the banking ombudsman scheme is administered by, question is that administered by is Ministry of Finance, nowhere related, SEBI is nowhere related, absolutely RBI and not banks. Administered by RBI, implements and operates by commercial banks. That is the part. So, our answer is answer C is the correct one. Moving to the next one, under the lead bank scheme, which bank was the first lead bank in India? Under the lead bank scheme, which bank was the first bank? That was Syndicate Bank. Syndicate Bank was under the lead bank scheme. Syndicate Bank was the first lead bank in India, not SBI. Don't get confused with this particular one. That is Syndicate Bank. Recently it merged with the Canara Bank. So then most faithful bank, Syndicate Bank. So answer C is the correct one. Which of the following is the largest commercial bank in India? Now then if we asked, which of the following bank is the largest commercial bank? So like this is a bit difficult question only. Punjab National Bank is the largest one but not top. Canara also, Bank of Baroda, HDFC is a private banks wise which has got a good market capital. The bank with the highest market capital is HDFC Bank, not even SBI. So SBI is a correct one. Number of customers wise, ATM centers wise, global operations wise, and loan mechanism wise, loans wise, even deposits wise, then for all these in all these areas, like State Bank of India occupied first position. Certainly then we should move towards this particular option. The answer is E is the correct one. NPA stands for, simple question, non-performing asset. NPA, non-performing asset. Non-performing asset, or sometimes we call it as bad debt, sometimes we call it as doubtful asset, bad debt, substandard assets, bad debt, non-performing asset. Non-performing asset can also call all these. Loss asset as well. Loss asset is the last one, final one. Loss asset. All these are negative words, negative terms. Even we call toxic assets. Toxic assets also negative word. Substandard assets, negative word. Loss asset, doubtful asset, bad debt, non-performing asset, risk weighted asset also we call negative, one more negative word, risk weighted asset. That's one. So non-performing asset, answer A is the correct one. Moving to the next one, a loan becomes NPA after it's overdue for 90 days. It's overdue for 90 days, then that becomes what? A non-performing asset. Absolutely, non-performing asset to substandard asset, substandard to doubtful, doubtful to loss asset. That is the context. So 90 days duration. Answer C is the correct one. Moving to the next one, CASA. CASA refers to current account and savings account. Current account and savings account. This is CASA. Current account and savings account, answer B is the correct one. CASA we call. CASA account, all these are all CASA accounts are liabilities anyways, all deposits are liabilities to the bank. All accepted deposits are liabilities to the bank. All accepted deposits are liabilities to the bank. So, this is CASA accounts. CASA accounts are demand deposits we call. These are called demand deposits. So, current savings account, that is a part. Answer B is the correct one. MSF stands for MSF, marginal standing facility. Marginal standing facility. To fulfill the very short term requirements, very short term, we can say the overnight financial requirements of the banks, they borrow from Reserve Bank of India for a duration of very short period, very short term, or we can say overnight. That rate of interest is called marginal standing facility, MSF. MSF is the very short term one. So, only here banks and Reserve Bank of India involves, that we should understand. Even call money already we discussed, call money also short term one, call money also very short term one or overnight, but here then the parties, several different parties involved in call money market, there is a context. So, marginal standing facility, answer A is the correct one. Moving to the next one, MSF stands for same marginal standing facility. Then which institution regulates insurance companies? Insurance companies. Reserve Bank of India regulates commercial banking system, commercial banks we know. NABARD, which supervises regional rural banks in India, correct one. Insurance Regulatory Development Authority, which looks after all insurance brands, maybe general insurance or life insurance. SEBI looks after securities and capital market, commodities market, derivatives market, etc. NHB, housing finance. National Housing Bank looks after housing finance. So, insurance companies, absolutely we should go towards answer C. Moving to the next one, the headquarters of the IRDA is in IRDI, Insurance Regulatory Development Authority. Number of times asked question, not Delhi, not Mumbai, Hyderabad. The answer C is correct one. Answer C is the correct one. Moving to the next one, KYC stands for, then is a simple, very simple question, a basic question. Know your customer. Know your customer. KYC is required to authorize the customer, whether the customer is the right customer or not, to check whether the customer is the right customer or not. Then certainly then this KYC is must. KYC is required, and like one more context, like if you observe, authorize the customer one way, and the second one to curb antisocial activities. To curb antisocial activities, we need a KYC, and to control money laundering activities, we need a KYC. This. So, like KYC, we should provide Aadhaar, we can provide Aadhaar, ID proof, we should provide ID proof, address proof, and photographs. These are to fulfill the KYC, we should provide this particular one. For every short duration, the bank reminds the customer to go ahead with the KYC, otherwise then they have got a permission to block the account of the customer to do the transactions. They can block the account of the customer. They can stop the operations. So then now the Reserve Bank of India facilitated eKYC. Then by sitting in our directly place like certainly then we can fulfill the KYC. That is a context here. It's an important one. KYC. Then know your customer. Answer A is the correct one. AML stands for anti-money laundering. Anti-money laundering. Money laundering. Anti-money laundering. Money laundering. Money laundering is nothing but money laundering is nothing but transferring black money. Transferring black money through illegal channels. Transferring black money through illegal channels is called money laundering. Here black money, we know black money is untaxed money. So AML refers to anti-money laundering, not additional money lending, automatic, no. So answer A is the correct one. Who regulates the capital market in India? Already we know, then it's a SEBI, not RBI. So answer B is the correct one. SEBI regulates the money market. SEBI regulates the capital market and RBI regulates the money market. That's the point. So like SEBI, Securities and Exchange Board of India, looks after this capital market. So the answer is B correct. Moving to the next one, plastic money. Plastic money is a credit, debit cards, checks, demand drafts, cash vouchers, e-wallets. E-wallet is a digital money. A digital money we call digital money we can say. So like ఈ previous question మనం ఒకసారి చూస్తే who regulates the capital market in India అన్నాం. Capital market SEBI. RBI money market కదా. RBI money market. IRDAI insurance regulator. NABARD వచ్చేటప్పటికి then which supervises regional rural banks అని చెప్పుకున్నా. SIDBI looks after small industries. Plastic money refers to అంటున్నాడు క్యాష్ వోచర్ ఈ-వాలెట్స్ వచ్చేటప్పటికి డిజిటల్ మనీ కింద చెప్తాం. చెక్ ఈజ్ అ నెగోషియబుల్ ఇన్స్ట్రుమెంట్ కింద చెప్తాం. నెగోషియబుల్ ఇన్స్ట్రుమెంట్. డిమాండ్ డ్రాఫ్ట్ ఆల్సో నెగోషియబుల్ ఇన్స్ట్రుమెంట్. క్యాష్ వోచర్ ట్రెడిషనల్ ఆర్ కన్వెన్షనల్ మనీ అంటాం. Conventional money. Credit debit cards are plastic money we can say. So answer A is the correct one. A is the correct answer for this one. Moving to the next one, the currency of Japan. Already while discussing the currency basket, we discussed about these dollar, pound sterling, and what else? Pound sterling, yuan, yen, euro. These are currency basket we call. Currency basket under special drawing rights. So dollar, pound sterling, yuan, yen, euro. Euro, you know, European nations or European countries, and like if you say yen for Japan, it's not visible. Japan, yen Japan, yuan China, pound sterling UK, dollar US. So Japan yen. Recently Japan is a country which introduced stable coins. First country in the world which introduced stable coins is Japan. Next, baht is a Thailand currency. Ringgit is a Malaysia's currency. Yen Japan, won is a South Korea's. South Korea, North Korea, South Korea's. Yuan is a China's currency. China currency. So our answer is C is the correct one. C is the correct answer. Moving to the next one, the banking services delivered by non-banking individuals are called non-banking individuals. If they say non-banking financial institutions, the answer is different. Non-banking financial institutions, if they say, the answer is different. Non-banking individuals, the answer is different. Okay. Non-banking individuals, so they are not a bank employee. That's the point we should understand. Non-banking individuals, they are called, officially they are called BCs, business correspondents. Business correspondent is a non-banking individual who services banking related, who delivers the banking services. BF model, no. Pradhan Mantri Jan Dhan Yojana, no. Branch banking, no. Inclusive banking, no, not at all related. It's a non-banking individual they are saying. So business correspondent, BC model. Business correspondent is a agent of the bank. Business correspondent is a agent of the bank who brings business to the bank. So is a non-banking individual then who works towards the growth of the bank and attracts more and more high network individuals and then customers towards the banking system, who brings the customer towards the banking system. That is business correspondent. He is the agent of the bank. Moving to the next one. So answer here we have A is the correct one. 54th question, A option is the correct one. And the next one, the concept of priority sector lending was introduced in the priority sector lending, PSL. The concept of priority sector lending was officially introduced in 1966. This concept was introduced in 1966, one of the oldest concepts of Reserve Bank of India. So answer here, answer C is the correct one. Which of the following instrument is issued at a discount and redeemed at par? Which of the following instruments is issued at the discount? Issued at a discount and redeemed at par. Redeemed at par. So shares, debentures and treasury bills, preference shares, fixed deposits. Fixed deposits, no discount we observe here. Preferential shares, preference is given to the higher officials of the company, so nowhere related. Debentures, treasury bill some extent we can. Shares, no discount, discounted shares there, but like redemption different. Debenture, industries generally disburse. Treasury bills, then discounts announced and redeemed at a par. At par in the sense here, it is less than 1 year. Less than 1 year duration. It may be of 91 days, it may be of 182 days, or maybe of 364 days. That is the context here. So treasury bills is the correct one. Answer C is correct. The headquarters of the Exim Bank is located in. Headquarters of the Exim Bank is located in Exim, Exports and Imports Bank. Exports and Imports Bank is located in Mumbai. Mumbai, answer C is correct one. So which provides export credit, export and import credit we can say. Moving to the next question. For opening a bank account of minor, who is authorized? Very important one. These are general questions. Minor alone, not a guardian, correct one. RBI nowhere related, this one. Generally, then to open a account for a minor, certainly then guardian credentials, guardian related information, KYC is required. Guardian related information is must to maintain. Even for orphan, even for the parental child, certainly then this is a required condition. Scheduled banks are those included in scheduled banks. Scheduled banks are banks included in second schedule of RBI Act. Scheduled banks are banks which are incorporated in a second schedule of RBI Act, that is the 1934 Act. This is the one definition. The scheduled banks are banks incorporated under 42(6) of A of RBI Act. This is also correct one. Second schedule of 42(6) of A we can say. So then scheduled bank is a bank then which is incorporated under second schedule of the Reserve Bank of India Act. So it's nowhere related to the Ombudsman. Banking Act, second schedule of RBI is the correct one. Companies Act, no. Non-negotiable instruments as well, no. So answer C is the correct one. Moving to the next one, who issues the banking license in India? Who issues the banking license in India? License ever issue చేస్తారంటున్నాడు. SEBI nowhere related. SEBI కి దానికి సంబంధం ఉండదు. Ministry of Finance, no. RBI, Reserve Bank of India. IRDA and HB, no. But here one thing then we should understand. The foreign banking license, if it is a foreign bank, then allowing a foreign business into the country, it's done by, it's generally then looks after by DPIIT, which works under the Ministry of Commerce and Industry, and license anyways then gives by RBI. So only one area gives one organization which gives license is RBI, Reserve Bank of India. So answer C is the correct one. The minimum capital requirement for the payment banks is minimum capital requirement. Already then we come across minimum capital requirement, or we can say this as a paid up capital. Paid up capital, that is 200 crores for payment banks. Answer C is the correct one. Answer C is the correct answer. Minimum capital requirement, minimum capital requirement, earlier it was 100 crores, now it is 200 crores. That is the context. So earlier it was 100 crores and moved to the 200 crores. Capital requirement, minimum capital requirement, or a paid up capital, this is a part. So answer 200 crores, correct one. The first payment here we can find some kind of difference as well. Have a look at this particular one. The minimum capital required to start the bank. So then minimum capital required to start the bank is 100 crores. So the paid up capital now, so then it has to maintain this amount while starting its operations. Paid up capital is then amount should in hand to start operations. is 200 crores. We can say like this. So then in this context, these two are not same. Minimum capital required to start the operations. So in that context, then make this correction 100 crores. Answer B is the correct one. B is the correct answer. So but paid up capital is all about shares and those. Then minimum capital required to start the operation, that is clearly 100 crores is correct one. 100 crores. And moving to the next one. The first payment bank to start operations was the payment banks. Then 11 payment banks has got permission during 2014-15 officially during that period, and then the first payment bank which has got started its operation, that is at Rajasthan. So Airtel Payment Bank. Airtel Payment Bank is a first payment bank started its operations. So answer A is the correct one. So then these are also payment banks: Paytm, India Postal, IPPB, and Fino, FPB, NSDL, PB. This is PPB. Okay, moving to the next one. NSDL stands for, it's important one, number of times asked one. NSDL, National Securities Depository Limited. Depository Limited, NSDL. This is the correct one. Answer A is the correct one. NSDL in general, it looks after, then it is a repository. A depository or repository we can say. Depository. Depository is nothing but which stores something. Stores the data of NSE, National Stock Exchange shareholders, share or investors we can say, investors. So NSE is a stock exchange. In that particular stock exchange, then whoever invested and their information, when they invested, how many shares they bought, these type of information maintained in that particular depository, that is NSDL. It's absolutely related to the National Stock Exchange, NSE. And then likewise Bombay Stock Exchange data, Bombay Stock Exchange index is Sensex. Index is different. And here like NSE index is Nifty, Nifty 50, Nifty 100, these are the indexes. Sensex is the index, but here like the depository which maintains the data of the customers, investors, that is CDSL. CDSL, Central Depository Services Limited, Securities Limited, Depositories and Securities Limited. This is the one. So then be clear with this particular difference. Moving to the next one, IFR stands for. IFR. So IFR stands for incremental funding ratio. Incremental funding ratio, generally then this word we come across in a monetary policy. Monetary policy we come across this incremental funding ratio. So it's nowhere related to this particular, this IFR. Asked one, several times asked one. E is the correct one. The minimum maturity period of a CD, Certificate of Deposits, CDs. The minimum maturity period. So like minimum maturity period, if they ask minimum for CDs or CPs, that is 7 days only. CPs and CDs, that is 7 days. And next one, which institution regulates mutual funds? Mutual funds. Mutual funds. Mutual funds, generally then every bank maintains a mutual fund manager. Mutual fund manager. Then the best example of mutual fund is a SIPA, Systematic Investment Plan. Systematic Investment Plan is the best mutual fund, and each and every bank has their own mutual funds, Financial institution has their own mutual funds. So mutual funds, entire mutual funds regulated by the SEBI, already we discussed. Securities and Exchange Board of India. Answer D is the correct one. The term incremental CRR. Incremental CRR, this particular incremental CRR was used at the time of demonetization. During 2016 then and 17, this particular word was used, and then whenever the Reserve Bank of India wants, then this particular incremental CRR it can apply. Incremental CRR in the sense then increasing the CRR percentage. So by that time then 100% was there this CRR. So CRR is a context where then every bank has to maintain some reserve at RBI. Every bank has to maintain some reserve at RBI that should be in the form of cash, then that is called cash reserve ratio, CRR. So every bank should maintain some reserve at RBI in the form of cash, that is called cash reserve ratio. And then incremental CRR is a context. Generally then at present is a 4%. If Reserve Bank of India wants to increase it, like it can increase up to 100%, even then it can maintain 100%. That was happened at the time of demonetization and remonetization context. Remonetization. So then here like incremental CRR used to, officially used to, then the purpose is controlling inflation. If the inflation is out of bound, then to control inflation, it focuses on that. So incremental CRR, ICRR we call, is a temporary to absorb the liquidity in the market. It is a temporary context to absorb the liquidity in the market. So answer A is correct. Moving to the next one, which of the following instruments is not a part of the money market? Not a part of money market, not antunadu. So call money part, commercial paper part, certificate part, debentures are not part. So answer D is the correct one. Debentures are part of capital market. That is the one. Answer D is the correct one. Which committee recommended the mergers of public sector banks? Merger of public sector banks then recommended by officially Narasimhan committee. Narasimhan committee recommended. So not Rangarajan, Malhotra, CLERK and Shah. Answer C is the correct one. Merger of PSBs, public sector banks. So then too big to fail. That is too big to fail. This is the concept behind this one. Currency notes are issued by Reserve Bank of India under which system? So gold standard, okay, proportional reserve system. Proportional reserve system, the earlier system. Minimum reserve ratio, now we are following. Exchange standard, no. 100% reserve, no. So then C is the correct one. Answer C is the correct answer here. So it is a minimum reserve ratio system. Minimum reserve ratio system is the correct one. Answer C is the correct one. What is the full form of ALM? ALM stands for Asset Liability Management. Asset Liability Management. Liability management is a function of asset liability management is a function of every bank, and we should look after its balance sheet. This balance sheet, then balancing the liabilities and assets is a simple context called ALM, Asset Liability Management. So asset liability management, the first option is the correct one. Answer A is the correct one. Moving to the next one, which among these is a qualitative tool? Generally then Reserve Bank of India focuses on quality control methods, qualitative credit control and quantitative credit control methods it focuses on. So this is a qualitative and quantitative. Quality wise is a performance related and the quantity is a number related. So percentage related. We can say percentage related. So here, like if you observe, which among these is a qualitative is absolutely performance related. Repo rate is a quantitative credit control method, CRR as well quantitative, SLR quantitative, MSF quantitative, moral suasion is a qualitative, QL, these are QN, quantitative, moral suasion, credit rationing, these are absolutely then qualitative tools. So our answer is answer D is the correct one. Answer D is the correct answer. CASA ratio represents what? We come across what is CASA, current account and savings account, we come across that one. And now then we are discussing CASA ratio represents what? CASA ratio not profitability, loan recovery no, it's completely related to the deposits. CASA is a current account and savings account is a demand deposit. So then demand deposit, or we can say it is a current liability of the bank. It is a current liability of the bank. Demand deposit to the customer. Current liability of the bank, we say. So low cost deposits, certainly then it's correct one. Not networks in network size, investment ratio no. And it is a share of the low cost deposits. Low cost deposits in the sense, in current account there is no interest to pay. Bank no need to pay any kind of interest here. In savings account, that is a minimal rate of interest. So here, like these are considered as low cost deposits. What are low cost deposits? Sometimes they may ask, what are low cost deposits? Low cost deposits are CASA. So answer C is the correct one. Sensex consists of how many companies? Yeah, Sensex stands for is sensitive index, which comprises of 30 blue chip companies. Which comprises of 30 blue chip companies. That is one. Answer A is the correct one. And moving to the next one. Who is called the father of banking in India? Already we come across this one, M. Narasimham. Narasimham considered as the father of banking system. So answer A is the correct one. Next one, which of the following is a function of the RBI? Issuing currency note, RBI function. Which of the following is a function of RBI? Issuing currency notes, or we can say issuer of currency notes. Absolutely function. Collecting direct taxes. Collecting taxes is a function of the finance ministry, or it may be CBDT, Central Board of Direct Taxes, like GST. These are related. For direct tax, CBDT, and indirect taxes, GST related activities will look after. But direct taxes, they are saying CBDT is responsible, then which works under the Ministry of Finance. So like this is not the correct one. Regulating telecom looks after by TRAI, Telecom Regulatory Authority of India. Management of railway budget, nowhere related. Controlling GST, nowhere. And issuer of the currency notes. Answer A is the correct one. 76. Next one, moving to the next question. Currency chests are maintained mainly by. The maintenance of currency chest. It's a very good question. It's one of the smart questions asked. SEBI nowhere related to this particular one. Government of India, some extent we may get doubt, and when Finance Ministry nowhere related. But these three are a bit confusing: RBI, Government of India, and selected commercial banks. Currency chest maintained by. Absolutely commercial banks. Currency chests are maintained by commercial banks. Maintained by commercial banks. And it's supervises by money releases by supervises by money releases by printed by RBI. These are supervises by, these chests are supervised and money releases by and printed by some printing areas like BRB NMPL, Bharat Reserve Bank Notes Mudran Private Limited. This is a subsidiary of RBI. So printing also Notes Mudran also looks after by RBI. And Government of India also involves here in some areas like in the preparation of securities in the sense certificates like securities, bonds, preparation of the bonds, minting as well, minting and printing of currency. Minting and printing of currency also looks after by Government of India. For this SPMCIL, Securities Printing and Minting Corporation of India Limited is responsible. So this is the point here we have. So here like our answer is maintained mainly by the commercial banks. Answer D is the correct one. A good question, very good question. Currency chess. Which of the following is not a function of commercial bank? Commercial banks has different types of functions like primary functions, secondary functions and arbitrary functions, secondary or arbitrary functions. Secondary functions or primary functions. So like accepting deposits is a primary function, deposits, giving loans, these are primary functions. Gold lockers, locker facility is a secondary function. Likewise, essential function, these are secondary functions. Which of the following is not a function of the commercial bank? Credit creation is a function, accepting deposits function, issuing currency is not a function, providing loans, remittance services. Absolutely, issuing currency is a function of RBI, not by the commercial bank. So answer C is the correct one. Moving to the next one, which organization manages India's foreign exchange reserves? India's foreign exchange reserves, forex reserves. India's forex reserves maintained by RBI, no other financial institution. That is that answer is D is correct one. Answer D is the correct one. Moving to the next one, foreign exchange in India is regulated under foreign exchange regulated under FERA generally, then FEMA, FERA, and these two are related acts. RBI Act is nowhere related. It's nowhere related to the foreign exchange. Banking Act, this is also nowhere related to the foreign exchange. Companies Act nowhere related. Companies Act 2013, then nowhere related. Then FEMA and FERA is related, but earlier FERA was there. Foreign Exchange Regulation Act, then officially at the time of Indira Gandhi, this was invoked, and later this changed by the Atal Bihari Vajpayee during 1999 as a Foreign Exchange Management Act. Foreign Exchange Management Act. So then the present one is this one. Answer A is the correct one. Answer A is the correct answer here. Moving to the next question, the instrument that involves both spot and forward transactions. Spot and forward transactions. So then these are related to the spot and forward. This is the context where like we use in derivative market. Derivative market, then we come across these terminology like forward, swap, future, and future options. These are derivatives market area. This is a capital market related one. Spot and forward context is called swap. The spot and forward is called swap. So then answer B is the correct one. Moving to the next one. The first development bank in India was, the first development bank introduced in India, number of times asked one, very important one, that is IFCI, Indian Financial Industrial Financial Corporation of India. Industrial Financial Corporation of India. Yeah. India's oldest Financial Corporation of India, which was introduced in 1948, immediately after the independence of the nation. IFCI. Answer B is the correct one. So B is the correct one. Exim Bank is related to the exports and imports. It is also a development bank. SIDBI, which looks after small industries. NABARD, rural banking. ISC, IFCI, industrial banking. IDBA as well, industrial development bank. So these are the terms in general we have. So the oldest one is oldest development bank, or the first development bank. First development bank 1948 IFCA. Number of times asked this question. It's an important one as well. Important one. So like officially IDBA is a, initially it was a government organization, later it became a private limited company. So like and the next one is officially IDBI introduced in 1964. IFCI 1948. NABARD already we come across 1982. NABARD already we discussed that one. And like if you SIDBI, then if you have seen SIDBI, then is a latest one only, not this one 1990, 89, 90 we can say 90. So like here then the question is the first development bank. So like the earlier one, that is IFCI. This was introduced in 1961. Exim Bank 1961. SIDBI long back, SIDBI 1990. And the NABARD 1982, IFCI 1948, the first Indian bank, development bank, that is IFCI. Moving to the next one, full form of answer we have to say B. B is the correct one. The full form of ECS. ECS number of times asked acronym, electronic clearing system or electronic clearing service, we can say. Electronic clearing service, ECS. Correct one. Answer A is correct. Electronic clearing service. So clearing the transactions electronically, that's a part. So NACH is the best example for this particular one. National Automatic Clearing House. National Automatic Clearing House. Not best instance we can say NACH. This ECS mechanism renamed as NACH. That is a correct way. Renamed as NACH. This electronic clearing system renamed as National Automatic Clearing House. So then for insurance premiums, to pay insurance premiums and those, then we go ahead with this NACH. So like regularly, then regular payments, then we go ahead with this particular mechanism. Moving to the next one. The minimum amount needed for a KYC compliant small account is some important one. Superb question. Small account. Generally, small account is an account. It is given to the customers. who has no KYC to provide immediately. సో ఇమ్మీడియట్గా కేవైసీ ప్రొవైడ్ చేయలేని కస్టమర్స్ ఉన్నారనుకోండి, అలాంటి కస్టమర్స్కి దెన్ ఇది మనకి స్మాల్ అకౌంట్ని ప్రొవైడ్ చేస్తారు. బెస్ట్ ఎగ్జాంపుల్ ఎలాంటి కస్టమర్లకి అని అంటే లైక్ మైగ్రాంట్ వర్కర్స్ ఉంటారు, మైగ్రాంట్ వర్కర్స్ వీళ్ళకి ప్రొవైడ్ చేస్తారు. మైగ్రాంట్ వర్కర్స్ ఆర్ మైగ్రాంట్ లేబర్ ఉంటారు, వీళ్ళకి ప్రొవైడ్ చేస్తూ ఉంటారు. సో గివెన్ టు ద కస్టమర్స్ హూ హ్యాస్ నో కేవైసీ, పర్టికులర్ కేవైసీ టు ప్రొవైడ్ ఇమ్మీడియట్లీ. సో the minimum amount needed for KYC compliant in small account, minimum amount ఏదన్నా ఉండాలని అడుగుతున్నాడు. So no minimum balance is required, no minimum amount is required for this particular one. Be clear with this one. Answer A is correct. Don't get confused with BSBDA. BSBDA, basic savings bank deposit account, basic savings bank deposit account, this is provided under Pradhan Mantri Jan Dhan Yojana. For this KYC is required. And for small account, initially KYC is not required, later then they may ask to pay after duration of 1 year. We cannot say these two are same, these two are not same. So answer A is the correct one. The maximum limit a small account, BSBDA account tons, so this is the difference you can find. So BSBDA account, BSBDA small, maximum limit for BSBDA account, basic savings bank deposit account, that is small. If they mention small in this category like a BSBDA small account, there is a context here. Otherwise it is a BSBDA different and a small account is different. 50,000 rupees per month, this is the maximum. 50,000 rupees is a maximum limit. So maximum limit, then they should not maintain more than 50,000 rupees at any time in their account. If the deposit crosses 50,000 rupees, then it won't allow in general. Digital transactions more than 10,000 rupees is not allowed. In a year, the transactions of 1 lakh, more than 1 lakh rupees is not allowed. These are the conditions under this particular BSBDA small account. So answer C is the correct one. The full form of RTGS, real time gross settlement, we are very familiar with this particular one. Yeah, online payment facility, online payment option. And the minimum amount for RTGS, so minimum amount 2 lakhs for RTGS. Be clear with this particular one. Answer E is correct one. For RTGS minimum 2 lakhs, there is no upper limit, actually no upper limit. It can be up to 49 crores. So minimum and maximum. Moving to the next one, the NEFT operates on not real time, weekly basis, monthly basis, annual basis. It is a batch settlement, or we can say slot based. Answer B is the correct one. UPI is regulated by NPCI, National Payment Corporation of India. National Payment Corporation of India regulates UPI transaction, not SEBI, not RBI. Don't get confused with RBI. That's the reason he mentioned at the top of in the first option. Answer B is the correct one. The institution responsible for printing Indian currency notes. It's a very good question. So then Indian currency notes. So two organizations we come across, SPMCIL one, the other one is BRB NMPL. BRB NMPL is works under is a subsidiary of RBI. It is a subsidiary of Government of India. SPMCIL, Securities Printing and Minting Corporation of India. Minting also he is saying, minting of Printing and Minting Corporation. So like here the Indian currency notes, Bharat Reserve Bank Notes Mudran Private Limited. So then first option A is the correct one. Answer A is the correct answer. The bank account with the highest liquidity is highest liquidity. So highest liquidity in the sense like the cash flow should be more and interest should be less, or interest should be less or no interest. Term deposit, we cannot say the bank account with the highest liquidity is not the highest liquidity. Term deposit. Recurring deposit, no. CD and RD and TD, term deposit, no. Savings account, no, because here like in savings account the cash flow will be there anyways, but interest rates are given. Fixed deposit, no, there is a current account. Answer D is correct one. Which of the following is not a type of check? Bearer checks, order check, cross check, gift check. Gift checks are not officially introduced, then answer D is not. The term MICR related to magnetic ink character recognizer. Magnetic ink character recognizer. Magnetic ink character recognizer, then we observe this in the bottom of a check. Bottom of the check in a digital format. Digital format, which is a 9-digit one. 9-digit number, MICR. So like the term which is related to check processing, it's a mandatory for check processing, very important for check processing. Answer A is correct. The 9-digit MICR code, the last 3 digits represents, it's a good question. The last 3 digits represents, generally then last 3 digits represents every time in every code, last 3 digits branch code only, that is branch code. Answer C is the correct one. So bank code, IFSC code, branch code. Branch code, 3 digits. Next one, a bank's profitability is best measured by. Bank profitability is best measured by, so like NPA ratio, no. CRR ratio, net interest margin. Net interest margin, okay. The given loan, the rate of interest at which then they are giving loans, the rate of interest at which then they are giving interest on deposits. So calculated case not. So is the correct one is the correct answer is C. C is the correct one. KYC guidelines. KYC guidelines were introduced under, yeah, very good question. Not FEMA, not RBI Act, SLR Amendment, Companies Act, that is under PMLA, Prevention of Money Laundering Act. It's a very important one and a nice question as well. Answer A is the correct one. Prevention of Money Laundering. Introduced under Prevention of Money Laundering Act, 2002. Moving to the next one. The first Indian bank to introduce ATM was, the first Indian bank introduced ATM was HSBC. Answer C is the correct one. HSBC introduced first ATM card, ATM. Which among these is not a digital banking channel? Not a digital banking channel. UPI and IMPS, RTGS, passbook printing. Passbook printing is not a digital. NEFT is digital. So answer D is the correct one. These type of questions they may ask in your exam. The term banking correspondent, BC, business correspondent, is related to not digital transactions, online KYC, corporate banking, financial inclusion is correct one. To achieve the financial inclusion, they introduced a concept called banking correspondent. Banking correspondent. Banking correspondent, a financial inclusion, if you observe, is providing banking facilities, to all citizens of the nation, at affordable cost. So then financial inclusion is the correct answer. Answer B is correct. So then moving to the next question, then have a look at the last question. The headquarters of the SIDBI is located. Then we know SIDBI stands for Small Industries Development Bank of India. Development Bank of India. So then headquarters asking, like Mumbai, generally then most of the students then they think that Mumbai is the headquarter, because like if you observe National Stock Exchange, Bombay Stock Exchange, NABARD, and like your RBI, Reserve Bank of India, for all these, even for standard organizations, EXIM as well, then this is the headquarter. But like Mumbai is not correct here, Delhi not, even not, and Lucknow is the correct one. So our answer is C correct. Don't get confused with this particular one. Only then the financial institution, or we can say development bank, only development bank which is having a headquarters in Lucknow is SIDBI, Small Industries Development Bank of India. That's one. So then these are the important questions here we have. So then try to go through all these questions then twice or thrice, so that like your confidence levels will be doubled or tripled. Certainly then I wish you all the best for your exam. Thank you.